Here we are, MMT. Look at that Apple trade. That was that short that we highlighted. We highlighted that Apple, and people would have to run for it, and they are, but we're going to put a low in, as he did at 516, and he just bounced at $3 in a tick. Now, if that's not high frequency, you tell me what is. How long have you been open? 2 minutes on this opening bell, and you can see that fast, rapid transaction taking place right now here on Apple Computer, and how to buy that left elbow gap down that we're
Long
famous
Apple.
for. All right, so Mr. Mantalk, you're long?
Long.
Okay, everybody, you hit that bottom, and it did it in milliseconds. And what it did at that very moment is that it ascended mathematically, and you can see that mathematical ascending direction going up here off of these lows. But look at the opening print, 523.66, and look at your high, and look at your low already, 516. Now, MMT, when the math starts to descend and selling the bid down, that is when you sell into the strength, as always, on these opening bells. Your 3-minute bar into the opening bell. MMT, Apple Computer. Google hit a low, 602.95 on that opening bell, left elbow. That's your entries and your exits up here. And you exiting into the strength. Over here, on that little CRM trade, Salesforce, you got down here to 139.40 and you put in a low. All right, so you are getting some delta ratio down in the overbought process. We continue to watch the Baidu off of the lows. Just where were these support levels? Here it found support at 133.50, Mr. Gibson, only for one reason. Is that once it got down to that support level, yes, it did have that turn. And it's right in the middle of that one, from the low end of 133 to the high end of 134, probably 90. Okay? And we're going to see how these little support level ranges, when you buy them, why you have to sell them into resistance. When the bid and the ask, and you sell them up, and you limit out the orders. So, that's the Baidu opening bell. There are other ones that we've been keeping an eye on here. Amazon. Here we have it, 178.36 coming down to those lows. All right, and this is what the bull run needed, this exhaustion that it was putting in to go ahead and shake everyone down out of the indexes. We've been training you for the last 3 weeks on this bull cycle. And the bull cycle has patterns to it. As you can see.
Taking profits on Apple.
All right, we have Mr. Mantalk taking profits on Apple. There it is right now, 520.74. Look at that high. Look at that open there. Look at that. All right. Now, we're going to be looking throughout the whole trading day. Does Apple make a series of lower lows? And when does the equity get back below the 500 mark? Period. And that we totally emphasized all high beta stocks that had met the SMF criteria was, don't buy into ETF bears. Why? Make your own bear. Everything that qualified, as we have looked at, was all up at the end, at the high end of their exhaustion areas in price. And there had to be a reversal. And that's why bull trends have reversals in them. Okay? And what you're going to be taking a look at is just the invert of when that bull rally was hitting those high-end price exhaustions levels where you would make a transaction. You can clearly see the weakness. These are not bull pops. These are people chasing that original bottom, and that reversal comes right into play.